Hi there, guys. Mauro here. Um, Sunday morning. Um, just having a look at my charts, preparing for the upcoming week, and just figured a few opportunities that might uh, hit the block this upcoming week. Um, yeah, so let's start with the Swissy. This is the weekly time frame. As you can see, this green line, we're inside a bearish order block. I've been inside a bearish order block, um, denoted by this a green bullish candle right over here. So we're pretty much inside this order block, and yeah. So actually, we left the order block, the bearish order block, but we ran inside a bearish order block. Um, if we go to the daily time frame and we insert the moving averages, the 9 and the 18 moving averages, um, we can pretty much see, let me zoom in a little more, that we had a crossover of the two, even more. Let me try. Yeah, you can see we have a crossover of the 9 of the 18 over the 9. So we pretty much turned into a bearish market at this moment. So I would uh, I would look for sell opportunities from this point on. Um, there is one, a very nice one, I would say, um, that would fit the description for a bearish market. As you can see, this bull candle right over here. There's an order block right over here, and it comes in. The bottom of it comes in at this red line. So yeah, if we drop to the 4 hour, we have an even better or an even another bullish candle that denotes an order block at the 4 hour. Um, if we pull the fib from the top to the bottom of the range, um, the red line from the daily time frame comes really close to the 70.5 sweet spot retracement level, and the red one really close to the 79. Um, we have the round number 95.50. So my guess is price will come towards the 50 level, and for a retracement lower. As you guys can probably see, there's also a support resistance level that comes in right around the 60 level, but yeah, right over here, very close to the 60 level. Um, but anyways, um, there's a obvious short opportunity coming up um, at the Swiss. So now let's move on to the pound dollar. Get this out of the way. The pound dollar. Let's move to the weekly chart too. We pretty much arrived at a bullish order block. We're actually inside a bullish order block at the moment. However, this order block, there's a good probability this order block will give price, as price has penetrated a lot inside this order block. But anyways, we're still also in a bearish market for the pound dollar. Let me just insert the moving averages. So as you guys can see, we're still very bearish longer term bearish weekly, and also still bearish on the daily time frames. So I would still be looking for shorts at this pair. If we have a look at the at the uh, at the yields, at the yearly bonds and yields, you're gonna see that both the U.S. dollar Treasury bonds and the U.K. Treasury bonds, they both made a drop, so there's no divergence between them, and therefore I would still be looking for shorts on cable. If we go down to the 4-hour time frame, there is a nice order block right around this level, around the 160, 160 ish level. There's a nice resistance also at the 160, 160, and as you guys can see, this is a very this green level right here. Very clean highs right at this level. So my guess is price would make a turtle soup penetration around this level, straight into the order block for another drop. It will be something that I would be looking for, obviously. If we just take this particular level right over here and we extend, and we use this to extend it to the 79 level, we probably have our entry sitting at around 160, 190, around that level would be a nice entry for it. But anyways, there's an obvious opportunity, especially the 161.52 level comes right around the bullish candle before the drop. So I would expect for price to hit up and then drop down convincingly for a short entry on cable. On another note, as you probably can see, let me drop to the actually let me stay the 4-hour time frame. But there's also an order block sitting down here for a bullish entry. If we pull the fib, the order block comes in exactly, or very close at least, to the sweet spot. Let me zoom in so you guys can see it better. Very close to the sweet spot for a bullish entry. Obviously, this would be a trade where you would be risking a lot less, since it's still a counter trend trade. So, but still an opportunity if price comes down to be a buyer. There's a nice move up here, which yeah, 178 pip move, about that. So yeah, there's a nice bullish footprint left by the market right around that level, those levels. So a long position could be established right around here. Now let's go to the Aussie dollar. This was a trade that I took. I'm going to show you a trade that I took this last week. As price was inside a, let me even drop better, 30-minute. Gas price was being limited by these very clean highs here. A nice order block sitting right around here. Right, let me drop to the 30-minute time frame. But another block was sitting right over here for a turtle soup entry. This was a nice entry. This bearish order block was hit. We pulled the fib. There you have your entry. This very clean highs over here, and then a sweep inside the order block for a drop. Pretty much the same thing might happen down here. Very clean lows sitting here. Bullish order block, an hourly bullish order block sitting below. So a long order could be established out of a turtle soup right around the 79 retracement level. If we use this level right over here and right around here, and we extend it towards the entry level, there you have it, 79 and entry level. So yeah, turtle soup with a measured move, pretty much a measured move, extending to the 100 level. So we expect price to drop for a buy and an up move. Right now, excuse me, let me clean this stuff out of the way. Get this out of the way. Clean this one too. This one too. So I can, yeah, there you go. We go to the weekly time frame. We're inside a bullish order block too. We have reached a bullish order block with this bearish candle right over here, right before the move up. Yeah, we're pretty much inside an order block, also very close to support level. So actually, price action is stuck between these two levels at the moment, the 188.90-ish level and the 86.60 level. So price is pretty much contained by these two. So it's pretty much sideways action at the moment. Therefore, you can take longs. Obviously, reduce risk as market is pretty much undecided. Even though if we put the moving averages in place, we get a bearish market. We still get a bearish market. As you guys can see, there's no crossover at this moment, so we're still bearish. The Aussie dollar is still bearish, and so I would favor shorts. Still favor shorts at this moment. But yeah, we have a short-term bullish opportunity coming up, as I just showed you, as I just mentioned. Onto the QE. QE is let me go to the weekly. QE is also inside a bullish order block at the current moment. As you probably can see, let me zoom in. You're going to be able to see it. It actually just left the bullish order block, but it reached an order block, and it started going up. Right now, we're reaching we're going for, at least looks like, a nice bearish daily order block. denoted by this purple line, magenta line, sitting around the 80-70 level, pretty much. Um, if we pull the fib, I have a confluence of levels. The 70.5 sweet spot coming right around the bottom of the order block. If we drop to the 4-hour time frame, there's also this bullish candle sitting right over here, very close to the 79 retracement level, around the 8120. So my guess is I would sell around the 8120, stops above this small consolidation right over here, um, for another drop. As you can see, market has been making higher highs and higher lows, but obviously these stops are being taken out. Stops right over here, stops right over here, stops right over here. Market is being engineered up, this is my opinion, obviously, to go up towards this level for another sell. There's also a bullish opportunity, denoted by this red line. Obviously, it would be a counter trend trade, but it looks an interesting level to be a buyer. Really close to the 79 retracement level, defending probably the 78.50 level. Probably the banks have interest in those levels. So yeah, we're pretty much bearish, so I'd favor sells. This one over here looks very interesting, very promising opportunity. Let me just insert the moving averages so you guys can see that the market is still bearish, as we still don't have a crossover of EMAs. So we're pretty much still bearish, and looking for both of these trades. Either way, my vision is that market will reach this magenta, this purple line before another drop. Moving on to the yen pair. I have this order in place already. Should have taken it out before Friday close. But anyways, market reached this this order block right over here and reacted very strongly. But still, if we move on to the lower time frames, you probably can see why I am taking this trade, as there is a bearish order block sitting right over here. Actually, this red line denotes the daily candle, and the 4-hour, this purple one, and if you drop to the 1-hour, even this red one looks like a real deal too. And if we pull the fib towards the low, as you guys can see, the purple line pretty much comes in at the 107 level. So I would think that the market would be defending this level. Also, there is this a resistance level sitting around the 106.80. So, and another one at 107.40. So the idea is let the market come back for another drop right around the 107 ish have a 107.10 would be a nice place to sell. I placed my order at 107.20. It is an institutional level right above the 107 round numbers. So yeah, whenever we talk about the U.S. dollar, Japanese yen, the yen, we have to pretty much talk about the S&P 500. This is the hourly time frame, the S&P 500 E-minis, the ES, and as you guys can see, this purple line right over here denotes the order block, the 4-hour, 1-hour order block. This red one denotes the 4-hour order block, and this purple one pretty much denotes the 1-hour order block. For an entry, as you can see, this is a bullish candle prior to the move. Clean highs at the moment, so my guess is price will attempt to break these highs into the order block for another drop down. So yeah, everything looks aligned for another yen drop at the moment. If we go to the daily time frame and insert the moving averages, you're gonna see that we have switched to a bearish market. See the crossover right over here. So yeah, we're pretty much in a bearish market for the US dollar, Japanese yen. Pretty much the same, I would say, for the S&P 500 market, equity market. Yeah, as you probably can see, the crossover, let me zoom in a little more. Crossover happened right up here, and yeah, looks like we're in for another drop. At least I think market retested this resistance line. So yeah, pretty indicative to me that we'll have a turtle soup entry right above these clean highs for another drop. Yeah, so this is it for today. I thought I would share these with you guys, and let's see what comes up in the upcoming week. All right, I'll talk to you guys later with another video. Later, bye.